Hey everybody, it's Chad Hallett from Movement Mortgage, Captain Mortgage, as some of you know me. And I'm here with the lovely Miss Riley Shaftner, who's from Movement Insurance, separate company, but under our umbrella group. And she's here to tell us a little bit about Movement Insurance specifically, and then a little bit about the homeowners insurance industry. So take it away, Riley.
Okay, so I guess starting off, my name is Riley. I'm with Movement Insurance. I have been in the insurance industry for about 12 years now. It was my first job out of college was with the insurance company, and I've been in the industry ever since.
Awesome.
Yeah.
How long have you worked specifically for Movement Insurance, did you say?
I've been with Movement for 10 years
Oh, wow.
and in the industry for 12 years.
Gotcha. What made you make the switch to Movement?
Really, I'd heard a lot of great things about Movement. A buddy of mine worked for Movement, and it worked out perfectly. So,
Right. What made you decide to get into insurance right out of college?
well, so out of college, I wasn't sure exactly what I wanted to do, but I knew that I wanted to do something where I could interact with people and help people, and it just so happened to be in the insurance industry. So I like that the industry, it's always changing. So I'm always learning new things. And the best thing about insurance is you're not selling a product, but you're working with people to help protect them and the things that they value the most. So.
Yeah, absolutely. Your home is, for most Americans, that's their largest investment. That's where they got most of their money tied up into. So it's definitely very important to have quality insurance and have someone like yourself, give them the best rate and the best coverage, make sure they're well taken care of.
Absolutely.
What would you say has been the most, I won't say the most, but how have you adapted to working at home and such since COVID kicked off? And, we've all had to make big changes. So.
Yeah. So honestly, we have not skipped a beat since COVID. I guess it's been about 7 months that everyone's been working from home. We just took our laptops and monitors home with us. And out of the past 7 months, we've had 5 record-setting months. So COVID has not slowed us down one bit.
Good.
Yeah.
I mean, I can completely understand why, because you guys are freaking knocking it out of the park. You guys got super low rates, and you're very responsive, which I appreciate from my clients, because I'm one of those loan officers that works nights, weekends, whenever, and I know I can count on you guys to get that late email, that late quote, or whatever I need. So we definitely appreciate it on our end. What would you say is the advantages of working for an independent broker?
So independent insurance agencies, we work with multiple companies. So we have the ability to shop around to find the best option for you. Whereas some of your larger companies like a State Farm or an Allstate, they only have one product, which is their own. So it really just gives you options to kind of shop around and make sure that you're providing the most competitive rates and coverage available.
Gotcha. Yeah, definitely some benefits there. When companies compete, usually the person that's doing the shopping is the one that benefits. So
yeah.
How often do you recommend shopping around for a new policy? Let's say I bought a home tomorrow, I got a policy through you. I mean, how often should I be monitoring that number and making sure I'm not paying too much or that kind of thing?
So really, you should review your insurance each year at renewal. There's always changes in exposure, or if you have any renovations to your home, you would certainly want to make sure your policy is updated. We have a retention department that reaches out to all of our clients every year at renewal, just to kind of go over their policy and make sure that everything is up to date.
Great. So you guys are proactive then?
Yes, absolutely.
And that's not just about cost saving measures. I assume that you guys try to get updates such as, did you guys, the last year, have you bought a Rottweiler? Have you added any kids to the home? That kind of thing?
Yes, yeah, we do have to underwrite, as well to make sure that that the risk is a good fit for the company that we place it with.
So something I learned recently from one of my other insurance partners was that they actually pull credit when you guys are working in quote. Is that correct? Or
So we do not pull credit. What they do is it's referred as a soft hit. So they kind of look at if you've had like prior bankruptcies, foreclosures. They do look at claim history and things like that, but they do not actually pull your credit. It will not affect the loan whatsoever.
okay, so similar to I guess getting a cell phone or something, not a big deal.
Yeah.
Now something I'm going to caveat on that. I heard that as little as one claim, even if it was a $0 claim, can affect shopping around. So like, let's say I had a claim last year on my home, which is a true story. And I wanted to go to movement insurance and I wanted to save a ton of money like all my clients have been doing. How do am I okay to shop with you, or do you think I got to wait a year or two, or what's the deal on that?
So most companies look back at claim history for about 3 years. And unfortunately, claims do impact the policy premium. If it's an act of God like wind, hail, those claims don't really count against you as much as some other claims like water damage or fire. Those tend to impact the premium a little more. But it's still a good idea to shop around because one company may be more competitive than the other with claims. So
sure, and the soft hit, that doesn't scare me. So that's a good point. There's not a real downside to calling you up or shooting you an email. For those watching, Riley is very responsive to email. So if you just hit her up, she can break it down Barney style for you, give you the steps needed. Something that you've done several times that have helped my clients is during a refinance. You've also convinced them to shop their homeowners insurance, and they end up going with you, and they end up saving a ton of money. And that affected their monthly payment, even in addition to, I should say, as well as dropping their interest rate. So I dropped their interest rate, you dropped their insurance premium, and those combined things are saving them hundreds of dollars every month. That's freaking huge. I had one client last March due to what I consider a bad appraisal. We ended up not pulling the trigger on the refinance. We couldn't do so because of what the appraisal amount came back at. But you were still able to save them, like, I want to say it was like $250 a month just on their insurance. That's how much they were overpaying. And so that's a huge, round of applause for Movement Insurance, because that makes me look good. So even though I didn't get paid and I wasn't able to refinance them, getting that better rate, you guys still saved the day. And I definitely appreciate it. Can you tell people watching that maybe aren't buying or selling right now, but they've had their home for a while, and just tell people what's the mistake of basing coverage on market value versus replacement costs?
So typically the market value differs from replacement cost. Of course, the market value is kind of what the home would sell for today. And the replacement cost, you need to have enough coverage to actually rebuild the home in the event of a total loss. It is important to keep in mind that the value of the land does not impact the replacement cost. So sometimes, if you're buying an oceanfront home, or if the home has, tons of acreage, then they just may not add up. It's common that we see the replacement cost, the market value, the appraised value, all of those things differ. And that's very common. So you just want to make sure that, in the event of a catastrophic loss, that you have enough coverage there to actually rebuild that home.
Awesome. Perfect. So that definitely makes sense. I know in Northern Virginia, we're not really sweating the market value too much, but things change year to year, and that's not the same for every nook and cranny of this country of ours. Sometimes the market value is less than what it costs to construct the home. I see that in a lot of economically depressed areas, like where I grew up, Western New York. It cost you more than what the market value is. That's for sure. I mean, was I going to say? Oh yeah, DTI. So I want to get, last thing I want to talk about primarily, unless you have anything else, is how you save deals. How does shopping the insurance make a determination on whether we can go forward on the loan or not? I was talking to somebody about this the other week. Some of our bond programs like VHDA here in Virginia, they are very, very strict. Most government programs and stuff, there's a wide range of debt to income ratios that are acceptable. It depends on the individual circumstances, but VHDA, now VHA, is very, very strict. 45% on the back end. That's it. If they're 0.001% over, you're disqualified. So in a couple instances, you know, I probably have to take off my shoes to count, but we've ended up going with you guys, and you guys have saved the day because let's say the underwriter didn't agree with my assessment on the income average or whatnot, and their debt to income ratio creeped up to 46% or whatever, and said, hey, I know you love going to so-and-so company XYZ for your car insurance, give Riley a call. And that's literally saved deals for me. And it's literally put people in homes, let them realize the American dream. That's huge. Can you touch on that a little bit?
Yeah, and I'm so glad to hear that, Chad. As far as, you know, we are constantly working with loan officers for new purchases and for refinances. And sometimes they just need to get the premium down just a little bit so that they qualify for that loan. So we're able to make policy changes to get the premium down, maybe try different deductible options, and then they can always go back and change the policy back after closing it if they wish. But we're certainly willing to work with loan officers to, you know, to make the deal work and to get them in that home.
Absolutely. And as I remind people, I mean, what they do after closing, they do have financial responsibility for the home, but what they do after closing is their business. If they chose to go with a little bit slightly higher deductible, as you mentioned, maybe bump it up to 1,500 or 2,000 and get themselves into that home, they can literally pick up the phone the next day and call you and say, hey, I want to lower my deductible. I realize that's going to affect my monthly payment by a few bucks, but whatever you can do to help me, great. And, yeah, that's been a game changer, and that's why I've been promoting you guys so much. I always, like I said, I always caveat and say, hey, I'm not getting any kickback. I'm not, you know, I don't have movement insurance tattooed on my arm or anything. You guys have just time and time again saved the day. I really, really, really appreciate it. Can you touch on a little bit about what you guys do for like the profits from movement insurance? Where are they going? What are we using them for? And why is that a big thing that people should consider when they're shopping for insurance?
Yeah, so our, you know, the profits go back into the community. So you can know that that's going towards a good cause. So that's always a plus. And as far as working with movement insurance, you know that all of our agents are very knowledgeable about the insurance industry, and we do work with many of the top rated companies. So we do have that ability to kind of shop around and find the best option available for you, and to make sure that, you know, that we're just providing the most competitive rates and coverage available.
Excellent. Appreciate it. Like Ms. Riley said, the profits going back in the community, what she's referring to is profits going into the Movement Foundation and movement matching company employee contributions to different charitable causes. And the Movement Foundation also sponsors charter schools and mission trips around the world. We've done many, many great things in our community. We literally, one of the reasons I love this company so much is, I know it sounds corny, love and value others, but it's true. I mean, we do. And we put our money where our mouth is. We don't just talk about, oh, we care about this charity or we care about that. We don't contribute to charities that only 10 cents on the dollar are actually going to the cause. We literally make a change. We make a difference in people's lives. And I really, really, you know, appreciate that from you guys. I appreciate that from Movement as a whole. That's all I got on my end. But Riley, did you have anything else you want to share with everybody?
I think that's it.
Okay. What's the best way to contact you? You prefer email, phone, or?
So either one works. You can email me at Riley, it's RILEY, at movementinsurance.com, or give me a call at 803-417-0725.
Awesome. Perfect. And I'll make sure to put that in the caption so people can catch it easy. But thank you again for your time, Riley. I really appreciate it. You're the best. And I'll be talking to you soon about my client.
Okay.